What's good, guys? This is your boy CS back with another one. In today's video, we're going to be doing some historical analysis on the S&P, basically indices, the stock market as a whole, and how it correlates to Bitcoin. So we're going to dive into the SPX or the S&P. I use it interchangeably, and just know how it's existed since the dawn of time, right? So the inception is prior to World War One, even, right? Goes back to 1871 apparently on this particular chart. So what we can see is, and the reason I'm showing this on a monthly is how the Great Depression occurred around this time, and in the aftermath of World War One, how economies were basically tanking. And then we had World War Two, I think it was 39 to 45. And as you can see, a big bear market. But actually, if you bought, I know that sounds very strange, in the middle of the war, you would have been up some and then some. But the reality is, and sorry, just bringing it back, the S&P 500 represents the 500 biggest stocks in the US markets. And although it might not be globally the 500 biggest stocks in the world, the US markets tend to have a greater weight than any other market in the world. Hence why we fixate on the S&P more than anything else. And then you've got the Dow Jones, which is like the top 30 or 50 of those stocks in the world. But the point I'm trying to show you, and the illustration I want you to get, is it's always an uptrending market, right? You do have bear markets, and these are given by these big dips. Like in 87, I'm presuming, what's that, Cold War or something? I don't know. Vietnam? I don't know what happened. Maybe there was some type of big war. My history is not good in the morning. In the 90s, there was too much going on, especially in the Middle East. But what I'm trying to illustrate here in the bigger picture, in the grand scheme of things, look how this has gone from basically like $4 all the way up to $5.30, right? And people are screaming for bear market. And one thing we've got to take into consideration is this is not a meme. This is not an altcoin, and this is not Bitcoin. This is the S&P, the global premium standard for trading markets in the world. Now, even if we look at COVID, right? Let's look at COVID from the 3rd of Feb. Let's take it from its high to its low. That's a 36% move. And granted, that's the end of a particular bear market. That's the start of a bull market. So we've got a 36% move there. But this is the bear market. So compare a black swan event in a bull market to a bear market. That's a 20% drawdown. Right? And we've not seen any pullback of any significance. Maybe here you could say one here, but even that got ate up until here. And this has been a nice pullback, a 10% pullback, and that's good. That's healthy. That's a healthy market correction. But even if we saw something like a 20%, that would take us even to down here. That is still a healthy correction in the grand scheme of things. Now, that would play havoc to Bitcoin and to altcoins and destroy them massively. Without a doubt, it would destroy them and all their progress. But I'm trying to get you to zoom out and actually see what's going on. So, like, we've only got 4 days left to this monthly close, and we've already ate up half. And I'm not saying that it's going to go green by the end of the month. But what I am saying is we've ate up half of its crap, which is down here. So it's actually been a very good monthly, well, look, so far looks like a very good monthly close that's about to happen in a couple of days' time. And so when people are talking about bear and bull market, and we're definitely in a bear market, well, I beg to differ, because people keep saying zooming out, and they're on like a daily, and they're like, yeah, look, it's lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. And honestly, I agree with that on the daily time frame. But if we go into a weekly, well, if I just say that's higher high, higher low, higher high, higher low, higher high, higher low, or maybe if we want to go on a monthly and just say, look, that's a higher high, here's the higher low, there's the other higher low, there's the other higher low. See how it just goes up? One could argue that. And that's why, trading is subjective. Now, coming back onto the topic at hand and why I'm kind of fixating on this and why I want you guys to have a look is just taking a look at all these charts. So even the Dow from 1897, apart from that big Great Depression that happened and ruined the market, there's only ever been like a couple of other events where it's just gone sideways or down. But really, this is the premium standard of the market. And again, this is ate up half of its gains. And the Nikkei I like just because I feel like in the Asia markets, Japan has a very good understanding of stock market, and the yen is considered a safe haven as a currency. So even now, when we're looking at it, it just looks like it's just following the trend. So if we go on the EMA ribbons, if it wants to load, okay, maybe it's not loading for some reason. Let's just go on the weekly and see if it loads. Okay, my EMA ribbons aren't working for some reason, but ultimately what it would be showing is that, oh, it's because I've hidden everything. Silly me, right. All we're seeing is that it's respecting the EMA ribbons, like since the dawn of time, right? Only a few times does it pop out on the weekly, but look, it always respects it. It's just bounced off the 50 EMA and trying to tackle it upwards. Same with the Dow. Respecting the EMA ribbons on the higher time frames. And with the Nikkei, same thing, right? And so the point I'm trying to get across to you guys is the fact that we're still in this trend on the higher time frame. And in a bear market, it's really, really slow and boring. And it literally, if you think the past 2-3 months have been slow and boring, that's incorrect. That has been really fast paced to the downside. Like, look how fast we moved to the downside very quickly. What happens with the bear market is it goes down and then goes up very quick, down very quick, up very quick. Right now, we've just gone down very quick. So right now, hence why I've been looking for some type of relief for stocks, and for that to kind of spill over into Bitcoin and altcoins, for instance. And so when I look at some of the biggest stocks in the world, and let's take Tesla, like the tariffs have just come out yesterday. Everybody was raving about it. Auto tariffs would raise car makers' cost by blah, blah, blah per vehicle. Right? Why is Tesla just bouncing today? Well, one could argue because the taxes on foreign vehicles, and Tesla's a US-based company. Therefore, it's getting a nice bounce. Look, I don't care about any of that. I'm following the trend. I don't really care about any of the news, right? Because at the end of the day, if we zoom out, this is an uptrend, right? And Tesla is the weakest of all the stocks. If we go in every single stock going upwards, look at how close they are to the all-time high. How are we in a bear market? This has not even dropped. I'll use the EMA ribbons as well. Right? How is this in a bear market? It's near its all-time high. Apple. Nvidia. Right next to its all-time high. It's just had a retracement. Tesla has taken a hit. I'll concede that. Microsoft. Right near its all-time high. Meta. Facebook. Right near its all-time high. Berkshire Hathaway at all-time highs. So are we just missing the fact that this is at an all-time high? What are we missing here? Berkshire Hathaway is posting right now all-time highs today, right now, this very second. So we're just missing the fact that it's posting all-time highs. So Warren Buffett has not got shit going on in the background. Please. MasterCard going back for an all-time high. ExxonMobil, a bit of choppy, I'll go on a monthly, choppy changey, but look, at its all-time high. Google or Alphabet, yeah, taking a bit, but still trending. Amazon trending. Netflix trending. Near its all-time high. JP Morgan at its all-time high. Intel, yeah, taking a beating. See, okay, apart from Intel and Tesla, let's say there's 10 stocks, 11 stocks, whatever there is, right? Only 2 out of those stocks have been hit. But I've shown you Berkshire Hathaway, which is at its all-time high today. And so my analysis is pointing to the fact that, look, we filled in the gaps to the downside. We still got one major gap to go below. I don't know why I've got an alert here. Why have I got an alert here? Excuse me. So, don't know why I had an alert there. But we've got one gap here, and we've still got that major gap up here at the all-time high. So, those that are representing, you got to remember, this is an index and indices, right? Those that are representing the S&P, that are moving the market, they're all in basically green, apart from Nvidia, Google, JPM, and Intel. The rest of them are pretty stark green. And like I said, Berkshire Hathaway posting all-time highs as we speak. So the correlation and how that filters into Bitcoin, like I don't want to fixate on Bitcoin in this video, but notice how Bitcoin just bounces off this trend line, this falling wedge trend line, right? And in the rising wedge pattern, it's also now bounced off this as again. And in this, well, if you want to call it a flag, it's not doing too well. We want to see it hit 88k, and then we can really see it ride. We want to see a real big move now from Bitcoin to get a close somewhere there. But the correlation is there with the SPX, the Dow, and the Nikkei. So the SPX has a lot to climb. It's got a long way to climb, but a lot of these big stocks are posting all-time highs. And you got to remember, they're prime mover coins. So when coins are blasting, like I consider Fartcoin to be a prime mover coin, which is doing really well today, and it's indicating that Bitcoin's having a good day. I'd also say Popcat is a kind of a prime mover coin. It's minus at the moment, but in actuality, if we look at its move, it's just been thunderous. It's just been moving from 0.14 to 0.24. It's added 100 million in the space of 2 to 3 weeks. I don't even like Peanut, but Peanut as well is a prime mover coin. Turbo, very similar, a prime mover coin. And even though I'm not in it, and I really regret not getting into it, Beam has been posting all-time highs every single day. And it's basically giving us a sign that some of these coins, altcoins anyway, are prime mover coins, that they're moving way ahead of the market, way more ahead of the market than any other coins. And they're basically signaling that, well, if that's already moved, it's only a matter of time before the other coins start moving, like your Bretts, your Flow Keys, and stuff like that. So that's where I wanted to conclude with, the correlation between the SPX, the Dow, to crypto as a whole, that there plays a massive significance that if the SPX moves as the indices, a risk on market with the top 500 stocks or the top 50, crypto will no doubt move or will lag behind and will eventually move. And then if Bitcoin moves, then altcoins will eventually move. Notice there's a lag because there's a risk on between each asset class. So look, S&P is a very solid indices to invest in. However, it's still a risk on asset compared to like a gilt, like a bond, or gold or yen or something like that, right? Silver, copper, some type of commodity, right? Maybe even gas or lead, nickel, zinc. There's loads of them. these tend to be safe havens to invest in. But a risk on indices like the S&P is probably like lower level than the Dow. And then you've got the actual stocks itself. And then you've got Bitcoin, which is like now a kind of medium term because of all the ETFs and stuff like that. It's become more commercial. So that's now kind of like a medium risk on level. And then you've got altcoins, which is just full blown delinquency, degenerate delinquency, right? Where you can make bank of it and you can probably make the most gains, but you can also lose the most amount of money too. Okay, guys, that's the correlation. And just one final thing before I let you go is we're still seeing on the USDT a rejection and support of this rising channel. And so we're still conforming to it. It keeps breaking in and breaking out of it. So yesterday it broke back in and today it's currently breaking back out and got a massive rejection. And also there's kind of like a descending wedge pattern, this orange pattern that's inside this channel. So just something to look at. All right, guys, hope you enjoyed the video and I'll catch you in the